Today, we are extremely excited to introduce two very special guests who are going to be joining us.
These two guests are going to share with you 3 ways in which homeowners insurance can drastically increase your monthly mortgage payment.
We would like to welcome Nick Slocum
and John Tatro from the Slocum Insurance Agency. Nick, so tell me the number one thing that you hear from insureds when they're buying a house that surprises them most often. Nick, the number one thing that surprises most of our clients is that they have to insure the home to its replacement cost, not its market value. What's replacement cost? Well, Nick, replacement cost is how much the company determines it would cost to rebuild the home in the event of a total loss. That's what they're concerned about. Regardless of where the home is located across Rhode Island, the replacement cost should be about the same. However, the market value will vary from city to city, even neighborhood to neighborhood. So how often are the replacement costs and the market values substantially different? Quite often, actually, Nick, especially if you're buying a home that was built in the late 1800s or early 1900s, if you're buying a waterfront home or even a home at a great value like an estate sale, a foreclosure, or a short sale.
So John, what is something you run across often that could increase a buyer's insurance premium? John, that's a great question. I often run across conditions in homes that buyers wouldn't anticipate being issues for the insurance company.
Elaborate.
Things such as the property's claim history, the proximity to the neighboring house, knob and tube wiring, fuses, an underground oil tank, or a roof over 20 years old could all lead to that property not qualifying for a preferred insurance carrier. What happens then? Well, then the only option is to place it with the state fair plan, and that typically comes at a much higher rate.
So Nick, tell me, what has the potential to increase a buyer's premium the most? Well, Nick, that's going to be flood insurance. Now, anytime a property is located in a high risk or an elevated flood zone, the lender is going to require that you carry flood insurance. Flood insurance premiums can range anywhere from in the hundreds to the tens of thousands of dollars. Wow, that much money? Break that down for me. Let's say for the sake of example, you're buying a home in an elevated flood zone and the annual premium is about $2,400. Beyond the regular homeowners insurance, you just increase your monthly payment about $200. Thanks for that info, Nick. And if buyers are making an offer on a home that's in a flood zone, they should definitely reach out and get a quote on that first to make sure they're comfortable with the additional expenses that they're going to face.
As licensed insurance agents, as well as realtors, we have the ability to walk through homes and point these things out to our buyers before they become real issues.
If you'd like to learn more, visit our website, nickslocumteam.com, or reach out to any one of us and we'd be happy to sit down and have a buyer consultation with you.
The coffee's on us.